Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Well, welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network. It's brought to you by our friends at PRMG. They are working for your best interest. So this is going to be Fed week. Thursday, you're going to get the Fed decision. They're going to hike rates, and they've really got the green light to do so based on what happened last week. So last week, we did see really strong jobs numbers. The rate of unemployment down at 3.7%. It stayed there, but creating 250,000 jobs, that's a pretty big number. Now, when we take a look at the inflation components to this, the hourly earnings number and the weekly earnings number. Now, I like to look at the weekly earnings number because I think that's more important. Look, hourly earnings, of course, it's important, but you know what? You can have differences in the number of hours that you work during the week. I think the weekly earnings is more important because that's the money that you actually get paid. And that was at an 11-year high at 3.4% gain year over year. The hourly earnings jumped quite a bit from 2.8 to 3.1% on hourly earnings on a year over year basis. And listen, that's important because when you take a look at these numbers in conjunction with each other, while hourly earnings are going up 3.1, the weekly pay number is going up 3.4%. What does that mean? That means not only are you making more per hour, but you're getting more hours as well. It really shows some robustness within the economy. Look, we already knew that, but because of technology, the worker hadn't been receiving these gains, at least from the data. But now that's starting to happen. So why is that worrisome? Because that could be inflationary, and the bond market doesn't like that. That's why the bond market sold off on Friday. And we are at some really critical junctures here. You know, we talked about what are the triggers and what are the catalysts. Let's review them because I think that are important this week. And remember, I started off telling you that we're going to get a Fed rate hike on Thursday. Bond market usually likes that. And if we get some participation in the bond market like we normally see after a Fed rate hike, we could get a reprieve. So let's go through where we are. So look, we know that mortgage rates are based on mortgage-backed securities. But what I like to take a look at as a good barometer is the 10-year Treasury, because we can all look at the same thing, and it's easy to look at as far as yield goes. This will give us the barometer for direction and where the guidelines are, but mortgages are based on mortgage-backed securities. Your rate sheet's based on mortgage bonds. But let's take a look for a moment here at the 10-year. So the 10-year right now is trading in a range between 3.11 and 3.19. You've heard me talk about this. We've gone back and forth between the two. And what's been driving that is the stock market. Now, the stock market took a big move down, but now it's moving back up towards a really important level as measured on the S&P. It's 200-day moving average, the average closing price of the S&P for the last 200 days. This is an important level. If this week the S&P 500 breaks above its 200-day moving average, then investors will pile in with confidence in saying this is kind of a sea change. We're going to get more bullish. We expect a bigger run-up. Let's take some money out of the bond market, and you will see yields rise. If you want to measure them by the 10-year Treasury, you'll probably see that 10-year challenge 3.19%. That's a really important level because after that, it'll go quickly to 3.25%. Now, that's a really important level because it breaks above 3.25%, and it's going to get ugly, team. It's going to get really, really ugly. So we got to watch the levers here. It starts with the stock market. We want to watch that the stock market doesn't break above its 200-day moving average. If that's the case, how much damage does it do to yields? We'll get to 319, but if we break above 319, yeah, well, it'll hurt because going from 319 to 3.25 on the 10-year, you'll probably see somewhere in the neighborhood of about 20 basis points lost in mortgage bond pricing, close to an eighth in rate. Not horrible, not wonderful either, especially since we had enjoyed a little bit lower move recently. However, a break above 3.25 could be really ugly. That's the one we want to watch out for. You really want to start planning your business if you do see that kind of a break, because that's not the time to play around. Take down if we break 3.25, take additional coverage, get people into process, talk to realtors, talk to sellers, and tell them, hey, go ahead and get moving here and get that loan on your new home locked in. So if that means going ahead and meeting a bid that's a little bit lower, go ahead and do that. So a lot to think about here. And you know what? We cover this stuff every day, and we have navigated these waters beautifully. In addition to that, look, this is a different market for you. MBS Highway is so much more than helping you with rates, which we do far better than anyone else out there. Originated the concept and do a great job for you. We've navigated these waters beautifully, but we've created, that's a tiny part of our business. We've created so many tools to help you refinance lots of people in your database by showing them debt consolidation, helping people overcome selling the home within the lower rate, buying a home with a higher mortgage at a higher rate by debt consolidation tools that we have. There's so many things that we have that make you an expert in your market. Dozens and dozens of tools that today originators are using to win. I'll tell you what, if you go up against the competitor that has it and you don't, it's going to be more difficult for you. And man, if you have it and somebody else doesn't, there's no reason why you shouldn't close that transaction. So take us up on the free trial. This is an important business. Your career is important to you. It's a small investment compared to the enormous return. Protect yourself. Go ahead and join us at MBS Highway. Talk to you soon.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.
This is Mortgage News Network.